So this is very important. Today I'm going to show you how to get a $1 million unsecured business loan with bad credit and no sales. There is a simple formula. Don't go anywhere. I'll be right back. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as terrific as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's show, I'm going to show you a surefire formula to get a $1 million loan with bad credit or no credit, and most important, without a personal guarantee, with no sales. This tutorial applies to any business located anywhere in the world, not just in the United States. So if you follow exactly and methodically the 5 steps I'm teaching you in this show, you will significantly increase your chances of getting approved for a $1 million business loan, or even a higher amount if your application is rock solid. Having said that, as with anything in life, there is no 100% guarantee, but with this method, you would have crossed all the T's and dotted all the I's in such a way that lenders who see your loan application will just want to work with you and fund your business right away. So you will find these tips helpful even if you have no credit, good credit, or excellent credit. Now, this show has 2 sections. I need to really break it down for you. So we first have the 5 points preliminary foundation. This is work you must do personally before applying for an unsecured business loan. And then the second option, the second part, we have the 5-step formula for getting a $1 million unsecured business loan. Before we talk about the 5 tips, there are a few things you got to take care of. I call this the foundational requirements. Very important. Make sure your company has a legal structure, though. In other words, you need to incorporate either as an LLC, S corporation, or C corp. If you are a sole proprietorship, chances are you're not going to get the $1 million unsecured business loan with bad credit. Simple as that. So you need to prepare a strong preliminary foundation. First, remove all potential skeletons in your closet. Very important. I'm talking about things like child support, criminal prosecution, pending divorce that could turn sour, bankruptcy in the last 3 years. If you have filed for bankruptcy in the last 3 years, you have to wait. If you owe back taxes, those are things that you want to take care of. If you have any of this pending, your chances of obtaining an unsecured business loan with bad credit are very, very slim, if outright nil. What does this mean? You need to remove any skeleton in your closet before applying. Very important, very critical. Or you can just come forward and reveal everything to the lender in something called an explanatory note. So if you have those things that are pending, you can still try to explain to the lender. They will understand. So number 1, remove all potential skeletons in your closet. Number 2, folks, you need to strengthen your sector knowledge. What does that mean? Very simple. Sector knowledge means that this is, if you are, let's say if you are in retail, if you are in fashion, you got to have knowledge here, folks. You need to polish your skills and knowledge. Training, you can get that through training and formal education, skill set, competitive intelligence, very important. And it is legal. You have to learn how to spy on your competitors, on your rivals. You need to have practical experience and networking. There are 5 degrees of familiarity when it comes to anything in life. So if I'm telling you to have knowledge, sector knowledge, I want you to go beyond familiarity. And there are 5 levels. So you have awareness, understanding, knowledge, expertise, and mastery. So when it comes to your business, you want to be at least at the expertise level, the 4th tier. Very important, because this is how you're going to convince others, especially lenders, to give you money. If you can go even higher, let's say to the mastery level, that's even better. And this means that you can hold, if you are a master or expert in your sector, you can hold a lengthy conversation about your products, service, or sector. You are able to substantiate every piece of information you put forward. And you feel passionate about the subject matter in general. Very important to kind of feel passionate when you're having a discussion about this, about the product. You're just chilling, you're just relaxing, right? In other words, you want to be in a position where you can do what? you can demonstrate a superior level of intellect in the topic. Number three, you want to surround yourself with skilled professionals. And when it comes to, if you want to get a $1 million unsecured business loan with bad credit and no sales, you need to surround yourself with winners. This is how you become a winner. And those professionals have to be skilled. And there are 5 types of professionals that you got to have in your team. You got to have a lawyer, very strong lawyer. You got to have an accountant, a CPA, or an EA, somebody who has familiarity, in-depth familiarity with numbers. You need to have a business development strategist. You need to have a marketing specialist. You need to have a general administrations agent, somebody who takes care of the admin stuff. Now, I'm not telling you to break the bank. I'm not telling you to, pay those people top dollar. You can actually outsource part of the work. There are a lot of platforms nowadays. You have Fiverr, you have Upwork, you have Freelancer, where you can just get great people at affordable prices. And some of those jobs you can actually do them yourself too. If you're good with accounting and financial reporting, guess what? You can take care of that. If you're great with marketing or sales, you can take care of the marketing part and the business development part. So there are 2 ways you can do that. All right. Let me talk to you now about number 4. So, folks, I'm giving you first the 5 points in the preliminary foundation. So, number 1, remove all potential skeletons in your closet. Number 2, you want to strengthen your sector knowledge. And number 3, you need to surround yourself with skilled professionals. And number 4, you need to understand lenders' language and you need to speak it. The mistake that a lot of people make is that they don't understand how lenders talk. Lenders have a specific language. All lenders in this world speak a simple language that has 15 and only 15 phrases, folks. 15 phrases. And if you know these phrases, if you memorize them, if you understand them, you can get approved for any business or personal loan you want. Guaranteed. Guaranteed. So, what are those 15 phrases? Lenders speak more in numbers than in words. You got to keep that in mind. So 15 phrases. So you have what I call the 5 C's. So the first 5 C's. What lenders look for. Lenders look for credit history, capacity. So they want to determine whether you can comfortably afford your payments, right? So here we are referring to liquidity issues. Or do you have enough cash coming in, and do you have, I would say, a large asset base? So credit history, capacity. The third C is collateral. So, and this only is valid when you apply for secured loans, right? Remember that in this show we're talking about unsecured. So the whole point of collateral doesn't apply here, but I just want to mention it. The fourth C that lenders care about, look for, is capital. So while your household income is expected to be the primary source of repayment, capital represents the savings, investments, or other assets that can help repay the loan. And number 5 is conditions. So lenders may want to know how you plan to use the money and will consider the loan's purpose, such as whether the loan will be used to purchase a vehicle or other property, expand, this kind of stuff. So they look at environmental, technological, and economic conditions. So the second level of, so remember I was talking to you about 15 phrases, right? So with the first 5 are done. Now let's move on to the next one. What lenders are worried about. They are worried they might not be repaid on time. So you have the credit risk. They are worried they might not be repaid at all, the default risk. They are worried they might be the last one to be repaid. Here you have debt seniority risk. They are worried that the borrower is in the wrong business or unable to manage their operations profitably. So here you're just talking about economic risk, operational risk, management risk. And the last worry is that the borrower might have illegal connections or involved in dodgy transactions. So here you are referring to compliance risk, reputation risk, security, and fraud risk. So if you're a lender really cares about those a lot. They really care about those a lot. So if you understand how lenders think and you're able to speak their language, then you know how to actually talk to them. And so those were the 10 phrases. You have 5. I have 5 more for you. What makes lenders sleep tight at night? Yeah, I know. Lenders pay attention to a few things, and as long as you are in the comfort zone of their risk profile, of their risk spectrum, whether it is qualitatively or quantitatively, you're fine. So here is what the lenders examine in the initial loan application and throughout the life of the loan, so that they are comfortable everything is going fine with the borrower and the loan. So they look at 5 things. So you have legal structure of the company and its regulatory compliance procedures. So LLC, C Corp, S Corp, partnership, sole proprietorship. As I said before, you want to transfer. If you're currently a sole proprietor, you want to convert that your company into an LLC, a partnership, a C Corp, S Corp to get the $1 million. So number one, the company's legal structure. And when it comes to the legal structure of the company, they also pay attention to the company references. So people like lawyers, bankers, top suppliers, and top customers, all this, I would say, all this entourage constitute the cornerstone, constitute the fulcrum of the business. And they pay attention to that a lot. And then they look at the cash flow history and projections for the business, right? The third thing they look at is financial ratios. Lenders pay attention a lot to financial ratios. I'm talking here about liquidity ratios, so current ratio and quick ratio, and the operating ratio, so things like inventory ratio, inventory turnover ratio, accounts receivable turnover ratio, return on asset, cash cycle, accounts payable days. Those are very important. Lenders also are able to sleep tight at night if they believe that the company, the borrower, has management with depth of expertise. In other words, founders, executives, mentors, advisors, all this nice population, if you will, has the proper knowledge. And the last thing they look at is the regulatory compliance. So regulations in the sector, regulations in the workplace, regulatory compliance processes within the company, and regulatory compliance champion within the company. If you have a regulatory compliance officer, for example. So when we talk about compliance in the workplace, I'm referring to things like employee discipline and termination, hiring practices, sexual harassment, intimidation, or other offensive acts, discrimination in terms of hiring, wages and hours, work environment, workplace safety, recruitment, and retention of employees. Folks, what I'm trying to say here is that when it comes to lenders, sometimes also examine credit history and collateral, but not always. What I'm trying to say here is you don't have to spend millions of dollars to set up your companies in such a way that you're able to get a loan. I'm just showing you what you gotta have to make a lender feel comfortable giving you $100 million unsecured business loan with bad credit. You can do everything I'm telling you here. You can do it. You can actually make it happen even if you are on a budget. There are ways to outsource a lot of the stuff I'm discussing in today's show. The next thing you need to do, you got to present your best self. So, folks, we're still in the strong preliminary foundation. So first, remove all potential skeletons in your closet, right? You need to strengthen your sector knowledge. You need to surround yourself with skilled, competent professionals. You need to understand the language the lenders speak. Very important. And number 5, you need to introduce yourself in your best light. So in terms of introduction, you got to have your resume. It's got to be polished. You got to have a short bio. You need to have the individual tax returns for the last 3 years. Personal financial statements are very important in terms of, by personal financial statements, I'm referring to balance sheet, also called statement of financial position or statement of financial condition. You have income statement, and then you have the statement of cash flows. And you also have to be able to relate and convey in a trustworthy way experience that you have in your sector or related sectors. And you have, this is kind of optional but highly recommended. You can, if you have had bankruptcy in the last 5 years, you want to include a bankruptcy, what we call a bankruptcy explanatory statement, BES. And if there is a pending litigation, such as divorce, civil, or a criminal prosecution, you need to explain that through something called LES, litigation explanatory statement. And then and then you have to also attach to the loan application something called an HCS. This is a holding company statement. This is where you indicate all businesses in which you hold equity ownership and or hold management, voting, or decision-making control. All right. So this is basically what it is. So here you have it, folks. The 5 things you should focus on in the preliminary phase, in the foundational phase. But there is one more thing that I like to add in terms of lenders' language. The secret is lenders have a weakness. Yes, they do have a weakness. And guess what? Lenders are businesses, right? Lending institutions are businesses, and so they must generate profit. So to increase your chances of getting approved for a $1 million unsecured business loan, you want to go to the lender's website and you want to list thoroughly all services they provide. And lenders are constantly trying to cross-sell, something called cross-selling. So if you're able to show them that your business could be a big potential customer on many products and services, you can get your loan approved easily. For example, a lender might also provide small business insurance services through an affiliate, provide merchant cash advance services, issue business credit cards, etc. You get the gist, right? So this is how you actually constitute a strong fulcrum, a strong foundation for your small business loan to be approved. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. Today, I'm very happy because I'm talking to you about how to get a $1 million unsecured business loan with bad credit and no sales. Now, so we've talked in the first part about the preliminary foundation. Now, let's talk about how to prepare a strong strategic loan application. First of all, you got to get some sales in the pipeline. Of course, the title of the show says no sales, but you got to have some sales in the pipeline. You need to show the lender your business is viable. And you don't have to have actual sales. There are ways to show that you have sales in the pipeline. First of all, you want to get a binding sales agreement from your top prospects. So in a binding sales agreement, a seller agrees to sell something and a buyer agrees to accept it. So it must include a clear and definite agreement about what's being sold. So this is sometimes referred to as mutual assent. So you don't really have to make the sales. As long as you have a binding sales agreement, the lender will understand, okay, there is a possibility of sales here. And so we can actually advance the loans. You want to get a letter of trade credit from your top suppliers. So make sure you get 3 to 12 months of trade finance. So a trade credit is a business-to-business agreement in which a customer can purchase goods on account without paying cash upfront, paying the supplier at a later scheduled date. So usually businesses that operate with trade credits will give buyers 30, 60, 90 days or 365 days in some cases to pay, with the transaction recorded through an invoice. So if you get a letter of trade credit from your top suppliers, what it is that you are telling the lender that your business is viable enough for top suppliers to grant you trade credit, and so that will ease the process. That will ease the risk profile through which the lender is viewing your application. You also want to propose a convertible debt arrangement to the lender. So with convertible debt, a business borrows money from a lender where both parties enter the agreement with the intent from the outset to repay all or part of the loan by converting into a certain number of its common shares at some point in the future. And the loan agreement actually specifies the repayment terms, which include the time frame and the price per share for the conversion, as well as the interest rate that will be paid until conversion occurs. This is very important. And lenders like convertible debt because you know what? There's a secret. The borrower pays them a fixed rate of interest until they trigger, the lenders here, they trigger their conversion, at which point they will own shares. Isn't that beautiful? That's beautiful. You also want to show advance payments from customers if any. So advance payments are amounts paid before a good or service is actually received. Again, here, if you're able to show that the top customers have paid you in advance, it shows the viability of your business model. And the last thing you want to do is you want to order a product viability survey from a top survey provider. So if the results are extraordinarily satisfactory, guess what? You can show the results to the lender in your loan application. All right. So there is something very important, the concept of product viability. I've been talking about that. When something is viable, it means that it is capable of not only germinating, but growing, So, in product development terms, viability means that a product not only gets purchased, but it performs well enough to be recommended to others. So, its popularity spreads organically, or as we would say today, virally. So, what you want is you want a product that both initiates a sale and generates word of mouth. So, this is the kind of stuff you want to have, and you want to put in your business plan. You want to put in anywhere around the application where you're showing the lender your business model and your products are, guess what, viable. Now I want to talk to you. The second step you have to do, you got to prepare a business plan. Now, you can actually prepare a business plan yourself. You can outsource the task, or you can use software, depending on your needs and financial situation. You can DIY, all right? If you have a knack for financial statement analysis, business strategy, and pitching, go for it. Write your own business plan, but again, you want to have it reviewed by another party. It's very important. We are targeting here $1 million. So it is important to have quality products, all right? A quality presentation. So you can outsource it. You can go on sites like Fiverr, Upwork, or Freelancer, or hire a local business consultant. Either way, folks, don't be stingy. Please do not be stingy and go for freelancers who promise to write you a business plan for, say, $5, $10, or $25. You get what you pay for. Don't forget that. So you want to spend wisely and seek quality first and foremost. To get a good business plan, you want to expect to spend somewhere from $300 to $3,000. Invest in quality, folks. This will be worth it when you get approved for your $1 million business loan. So that's the second thing. Now, in terms of software, there are software tools out there that you can actually purchase, and you can use that. You have a Live Plane, fantastic tool. You have Base Plan. You also have Business Plan Pro. We're actually showing you right now on the screen each screenshot. You have Enloop. That's fantastic also. You have Go Small Biz. Kind of love that also. And in terms of a business plan, in case you're not familiar with the business plan, a business plan has a few parts that are integral to the plan, and lenders will also they constantly want to pay attention to that. So in the business plan, we have an entire show about the business plan. So I'm going to quickly just go through this. So you have the executive summary in the business plan. You got to have a company description, market analysis, competitive analysis, description of management and organization, the breakdown of your products and services. It doesn't matter whether you have a sale or not. You got to still describe your products and services. You got to have a marketing plan. You got to have a sales strategy. You got to have a request for funding, and you got to have, last but not the least, financial projections. Very important. And some business plan will want to have things like financial and legal documents. So you are showing a potential lender. You can have a copy of your driver's license, your ID, business licenses, balance sheet, bank statements. You can also have as an appendix to the business plan, articles of incorporation, right? That would be very helpful, especially if you have a C corp, if you have an S corp, or you have an LLC. Very important. Number 3, you need to have your company's financials audited. Very critical, folks. Again, do not be stingy here. Having your company's financial statements audited will increase your chances of getting your loan approved, even if you and or your business have bad credit, and the company has no sales. Doesn't matter, folks. If you really kind of understand here, what I'm trying, the little castle I'm trying to build in your mind right now is that castle revolves around what? Credibility, trustworthiness. You have no sales. Okay. You have bad credit. Okay. How do we actually bypass those two important hurdles? How do we make sure that the lender understands that you are legit and you are a bankable risk? What I would call a bankable risk. You got to go through trustworthiness. You got to show credibility. And how you do that? By having your company's financials audited. And it's critical. To actually get an auditor, I would say go hire a CPA, a certified public accountant, or you can also hire an experienced accountant or a CIA, a certified internal auditors. CIAs usually work for companies. They don't do public accounting, so you want to go for a CPA. But if you have someone who has experience as a former CIA, they might be cheaper, so go for a CIA. It is important to have your financials audited, because not just for the lending process here. Obviously, it will add a huge boost to your application. Believe it. If you attach to your loan application a report, an unqualified audit report from a CPA. Unqualified means that they haven't found anything. They haven't found anything major, anything significant. All right. And so, besides the benefit of credibility, of added credibility vis-a-vis the lender, you also have other benefits. All right. So, for example, through an audit, you can discover fraudulent activity in your company. You can tweak productivity. You can obtain certifications. Some regulatory agencies at the state and federal level wants to have audited financial statement also. You can improve your tax compliance and planning. You can identify bad accounting practices, and this is very important, because think about it. In the United States, at least, we have something called the U.S. GAAP. So this is the U.S. generally accepted accounting principles. And if you have some kind of messy bookkeeping, you have some kind of inaccurate accounting and financial reporting, by having an external auditor come and look into your books, he or she might discover some bad accounting practices, so you can correct that. And last but not the least, and I think I've said it before, a financial audit lends extraordinary credibility to your financial statements. And this could help you boost your chances of getting your $1 million bad credit loan. Step number 4, folks, you want to zero in on the right lender. First of all, you got to understand the various types of lenders here. If you have bad credit, no sales, and you're trying to get a $1 million loan, obviously you're not going to a bank, to a traditional bank. No, you can't do that, because your risk is too high. They're not going to look at you. So you first need to understand the different types of business loans. I'm showing you right now on the screen here. You can see the types of business loans. So you have term loans, you have SBA loans. So term loans, you got to have good credit and a strong business. SBA loans, you have a strong business and can wait for funding. Business line of credit, you have short-term financing needs and you want flexibility. Equipment loans, if you want to own equipment outright. Invoice factoring, so you have unpaid customer invoices. In this case, you can't do invoice factoring or invoice financing because you have no sales. But for invoice financing, you have unpaid customer invoices and you want control over their invoices. You can also apply for a merchant cash advance, so you have high and consistent credit card sales and can handle frequent payment. Personal loans, so you are a startup and have a strong credit score. Business credit cards, you have ongoing business expenses. And microloans, if you are a startup and need a small amount of financing. The reason why it's important is that you got once you know the typology of the business loans offered out there, you're able to zero in on the right one. So if you have bad credit and you need a high business loan amount, you need to focus on 4 types of loans: term loans, business lines of credit, equipment loans, right? And the last one, business credit cards that offer no cash advance fees. So term loans is a common form of business financing. So you get a lump sum of cash up front, which you then repay with interest over a predetermined period. And online lenders offer term loans with borrowing amounts up to $1 million. And they can provide faster funding than banks that offer small business loans. It's very important to know. And the business lines of credit provide access to funds up to your credit limit, and you pay interest only on the money you've drawn. And this can provide more flexibility than a term loan. You also have equipment loans, so this helps you actually buy equipment for your business, sometimes including semi-truck financing. You can have auto loans, for example. And equipment loans term typically is matched up with the expected lifespan of the equipment. and the equipment serves as collateral for the loan. And rates will depend on the value of the equipment and the strength of your business. So one thing I'm trying to say here is that obviously with an equipment loan, you don't have an unsecured loan, but it's always good to know this kind of stuff, right? Number 5, folks, the fifth and last steps in our formula. You need to deliver a pitch to the lender. You need to ask, folks, all the things that I'm talking to you about. Once you have an application, the whole package, do not file online. No. You need to ask the lender's underwriting team to give you an opportunity to pitch to them so you can explain things verbally instead of relying on algorithms to evaluate your application. If you have bad credit and you have no sales, you're not going to get a loan online. You need to talk to someone. You need to actually prove to them that you are a great candidate. All right. So you want to have a good pitch. So you want to, a good pitch actually balances business and emotional needs. Whether you're pitching to a company, an investor, a customer, or a potential partner, you have to hit a person on both emotional and business levels. Without this, your pitch is almost certain to fall flat. And a good pitch has to be brief. A good pitch tells a story. You want to tell a story of your company. Obviously, you have bad credit and you have no sales. But what about the future? What are the prospects? Where did you come from in terms of your economic journey? Tell a good story. You want to package that story in a great package, if you will, so that people can actually connect with you. Lenders can connect with you. And a good pitch also focuses on benefits. So value beats price every single time. So instead of focusing on cost or features, your pitch needs to focus on the value you're going to create for the person you're pitching. All right. So one thing I want you to remember here is that while you're pitching to a lender, you got to do a few things. You want to know whom you're pitching to and tailor your pitch accordingly. You want to understand the lender's needs and motivations. Very important. You want to go deep into what challenges your audiences face. You want to create a beautiful and powerful presentation. You want to have an up-to-date rendering or mock-up of your products. You want to solicit testimonials from current users or investors. You want to film promotional or explainer videos. Try to craft an exciting intro, folks. I'm giving you like a list of, a sundry list of things you need to work on to just wow the lenders. You need to explain the business opportunity, highlight the underlying business model. You want to answer why you can beat the market, even though you have no sales at the moment. You got to really explain clearly why you are the best or you are among the best. You need to explain who you are and ship your story. You need to cover your current traction. You need to make your ask incredibly clear. You're asking for $1 million unsecured and unsecured loan, right? You need to keep it short. And one thing I want to really say here is that you need to rehearse. Remember that you can actually deliver the pitch via video conference if need be. You don't have to do it physically. A few things to remember. Remember personal expertise, vision, and conviction. Having this trifecta will help you decide if you are committed enough to the project. Have your team, maybe a lawyer, accountant, business development specialist around you. Try to convey that you have sector intelligence, as I spoke about before. Get your corporate house in order if you haven't already done so, and understand the mindset of the lenders that you're pitching to. All right, folks, this is it for today's conversation, and this was a pretty aspirational show, and I've actually explained to you how to get a $1 million unsecured business loan with bad credit and no sales. And just kind of quickly recap what we spoke about here. There are two steps here. There are two phases. First, you got to take care of you got to have a strong preliminary foundation. You need to remove all potential skeletons in your closet. You need to strengthen your sector knowledge. You need to surround yourself with skilled professionals. You need to understand lenders' language and be able to speak it competently. You need to present your best self. So that's the first phase here, the preliminary foundation. And the second phase is you need to prepare a strong strategic loan application. We're not talking about a standard loan application. No, you can't get $1 million loan with a standard application, especially if you have no sales and you have bad credit. You got to have a strategic, a tactical loan application. Number one, how do you do that? You need to get some sales in the pipeline. You need to prepare a strategic business plan. You need to have your company's financials audited. You need to zero in on the right lender, and you need to deliver a pitch to the lender. Now, all the things that I've spoken to you in the second phase, you can outsource them. You can outsource them. You have freelancers online. You have freelancers, local freelancers who can actually help you do all the business, create a business plan, have do some marketing, create a website. All those things can be outsourced. All right. Remember, the thing here is that if you want to be a winner, you got to surround yourself with winners and pay them well. Thank you so much for your attention. I really appreciate it. I will see you next time. But until then, remember, stay marvelous and profitable.